What's up, everybody? Welcome to the Stocks channel. My name's Cory, and tonight's episode will be your daily stock market technical analysis update. We saw the stock market continue its bounce today, and we're going to take a look tonight on what it'll take for the stock market to continue to head higher. Before we jump into the charts, please help me out by smashing that like button and go ahead and subscribe to the channel so you can follow along with all of my daily updates. First up, we'll take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so with today's price action on the SPY ETF, we see the price going up 1.77%, and we did go ahead and close that gap above. So to really see what happened today, let's go ahead and jump over into a 1 hour chart, and we can see that we did gap up and we went into this gap and closed the gap above, but we did get suppressed below our resistance trend line and the price failed to break out higher. Now if we zoom out here, you can see this resistance trend line has been suppressing the high side of the prices, and on a 1 hour chart, we're continuing to get these lower highs and these lower lows. So now that that gap is gone, does it mean the stock market is ready to go higher? Well, the first thing the bulls need to do is they need to break out of this resistance trend line and get a close above, at least on the 1 hour chart. In the short term, that'll be bullish sign. Going back over to a daily chart, we also need to see a close above our resistance trend line, which is right around a price target of $336 right now. And we also want to get a daily price close above the top of that gap at $338. So if I turn on the moving averages and the Bollinger Bands, you can see that we're still in a bear trend because the 5 EMA is below the 13 EMA and the price action did get held up just under the 13 EMA today. So we're starting to get signs of bullish price action because we did get a close above 331, which was our previous gap that we needed to get a close above. And we did also close above the 5 EMA. So the next thing the bulls need to do is they want to come out here and start closing above the 50 EMA, which would be a similar close above our resistance trend line. And then as soon as we get a close above 338, we should start to see the 5 EMA start crossing back above the 13 EMA, and we'll start looking at the 20 simple moving average. So the bulls are starting to take over through price action, but we have to acknowledge that the trend is still bearish. As long as the trend is bearish, we have to protect our money because there's still more downside potential. There's still the full possibility that we get rejected at this resistance trend line and continue to head lower. So we did have a nice bounce off of the lows, but we don't want to get overconfident. As long as the trend is bearish, we need to be defensive. So you can see on the 1 hour chart, we keep going up to that resistance level and we're failing to close above it. So watch for a close above that resistance trend line and a close above 338. And we'll start seeing more bullish price action, which should help reverse the bearish trend into a bullish trend. So back to the daily chart, you can see that we also now successfully formed a higher low that we have pivoted from. So we're in a situation where we have lower highs and higher lows, which is a consolidation correction pattern. So we're kind of going in this ABC, ABC, ABC pattern. So there's still potential for this to break out of this resistance level and start heading higher, and we can still form another lower high somewhere in the range of $348. So this bounce can continue, but in order for the bounce to continue, we need to break above this resistance trend line and the gap closure at $338. You can see that the price action went all the way up to that gap and closed it, and we did close lower for the day below the 13 EMA. So the bulls are fighting, but the bears are not giving up, and the bears are still using that gap resistance as an area to short and sell into. So once the bulls get a close above 338, there should be a lot of short covering and a lot of people buying into this market, and we could see that last little oomph to get us up to that next price target. Now for support levels, if we start pulling back, we are above the 5 EMA now, so we could find support at the 5 EMA. If we break below the 5 EMA, we could find support at previous resistance, which is newfound support at $331. If we start breaking back below $331, we have the same support levels at the 0.236 Fibonacci retracement at $325. And before that is the last line of defense support for the bulls at $321. So right now it's looking good on price action, and it looks like the 5 EMA and the 331 levels should hold up as support. So look for those levels for a bounce if we do start getting additional pullback from here. Next up is the Nasdaq 100 QQQ ETF, and we see the Nasdaq 100 also had some bullish price action today, closing above the 5 EMA. Now the Nasdaq 100 still has ways to go to the upside before it starts closing its upper gap, and we see the Nasdaq going up 1.73% today. So overall pretty good. But going over to a 1 hour chart, we can see that the Nasdaq 100 is also failing to break above the resistance trend line. So until we break the trend line right around a price level of $276, we have to still be bearish on this market. So don't forget the gap above is at 279, and that gap will close at a price target of 281. Now don't forget, this market still has a lot of volatility, so when we're buying these sell-offs, we want to sell and make our profits quickly and get out and get ready for the additional pullbacks. We're still in a bear trend, so we want to get in and out quickly while volatility is in this market. So if you're looking at how to trade this market, don't forget that we have the Stocks Channel Discord, and you could see a link in the description on how to become a member and join the Discord. On Friday and on Monday, we were buying up the QQQ dip, and today we did take profits way up here, and we had a nice profit in just a 2 or 3 day trade. So we're making a lot of trades on the Discord, and if you're interested in trading and looking for entries and exits in this market, the Discord is the place for you to be. So like I said, the trend is still bearish because the 5 EMA is below the 13 EMA. So in the short term and the medium term, we still have somewhat bearish pressure on the trend. So the price action is looking better with a close above the 5 EMA, but we still need to be patient and watch this trend because you can see on the 1 hour chart, we're still failing to break above this resistance trend line. Now, once we do break the resistance trend line at a price target of about 276, our price target above is going to be the gap at 279, and that gap will close at a price target of 281. We could find additional resistance at the $281 level, and the bears could use that as an opportunity to short this market again. So remember, there's a lot of volatility and there's still bearish trending going on. So if you're trading in this market and you're going long, make sure you take your profits and don't get greedy. If you're shorting in this market, the same thing applies. Just as you've seen from the bouncing, we could go back up, and volatility works in both directions. So if you're shorting, set your stop losses, and if you're going long, take your profits quickly. So as far as downside support level goes for the triple Qs, we have the 0.236 Fibonacci retracement at $270, and we also have previous support level at 261. So you can see we're starting to pivot from a low on the Nasdaq 100, and we could also be forming a higher low. So the Nasdaq 100 and the SP 500 look like they're in a consolidation wedge, forming lower highs and higher lows. Next up, let's take a look at the Dow Jones Industrial DIA ETF. And we see the Dow Jones looking really good, closing up over 2% today and closing above the 13 EMA. Now, the one thing to note on the Dow is we did open up 2 gaps on this monster bounce that we had off of the lows. So as we know, gaps typically get filled in these ETFs, so we have to pay attention to those gaps below. The first gap will close at a price target of 269, and the second gap will close at a price target of 265. So we still have a bearish trend with the 5 EMA below the 13, and we now have gaps below that we know typically get filled. So in bear trends, we're looking at downside price targets. So we're going to watch the gaps at 269, the 0.236 Fibonacci at 266, the gap close at 265, and the previous gap close at 264. So there is a lot of support below for the bulls to build on, but we're in a bear trend, and right now we're giving benefit of the doubt to the bears, and you can see that the price action came all the way up to the 50 EMA and did get rejected today. So there's still a lot of volatility, and we don't want to make any assumptions that we're going into a bull market until we see the trend shift. Right now, all 3 indices are still showing bearish trending. Even though we are getting short-term bullish price action, that's not enough for us to go long on this market. Also note on the Dow, the gap above did close today at the price target of 274. So we have to give increasing probability that we're likely to see a retracement from these price levels, and we're likely to see gaps close on the Dow. Next up is the VIX, which is our fear indicator, and we see the VIX going down today, which is what we want to see when the market's going higher. We also see the VIX did find support at the support level of 34.7, and we did close higher at 35.6. So you can see volatility still in a very strong bullish trend, and we did actually get a close on the VIX below the 5 EMA today. So we're starting to see hints of a bullish rally starting, but we don't have enough evidence that this bull rally is going to continue, and more than likely right now we just have to assume that this bounce is a short-term technical bounce and it could be short-lived. So remember, we don't want to make any assumptions, and we want to stay on the side of the trend. So we still have a strong trending upward VIX and a downward trending stock market, so we want to be defensive, and we still want to take our profits quickly and get ready for more downside, because more downside means more trading, and we're going to take advantage of this volatility and continue to trade. Next up is Apple, our market moving stock, and we see Apple went up over 1.5% today, but still price action closing below the 5 EMA. The 13 EMA has now officially crossed below the 50 EMA, so we're seeing increasing signs of bearish trending going on, and we have a negative sloping 20 simple moving average. So closing below the 5 EMA is bearish price action, and we have bearish trending. So right now we continue to look at downside price targets on Apple, which is our previous support level at 104. If we break below 104, we're likely going to close the gap at $96. To start reversing this bearish trend, we need to see the Apple bulls close above the 5 EMA, and we need to see that 5 EMA close above the 13 EMA to let us know that the bearish trend is ending. Next up is Tesla, and we see Tesla had some bullish price action today, closing above the 5 EMA as well as the 13 EMA, but closing just under the 20 simple moving average. The bearish trend looks like it could end soon, and if the bulls can get another bullish price action day, it looks like that 5 EMA could cross back above the 13 EMA, and we can go back into a bullish trend. So Tesla had some good price action today, closing up over 5.8%. And it looks like the Tesla bulls might be back in action. We can see a slight increase of volume on today's bullish price action, which is a good sign, and that's good evidence that there's people buying into this strength. So if Tesla can get a close back above the 20 simple moving average and we can get the 5 EMA to go back above the 13 EMA, we could start heading back up to our previous all-time high on Tesla up here at $500. Next up is the US dollar, and we're looking at DXY, and we see the dollar getting flushed today, going all the way back through its resistance level that it broke through, which should have been support. And we closed all the way below the 20 simple moving average. So extremely bearish price action on the dollar, and a weak dollar is likely to mean that stock prices should continue to go higher. So it looked like we were going back into a bull trend on the dollar, and right now we're getting an extreme bearish engulfing candle, which is very bearish price action. The trend is still bullish in the short term, so we'll give it benefit of the doubt right now. But as you can tell from the price action, things are not looking good for the US dollar. Next up is gold, and we see gold continuing to bounce off of our support level down here at 1860, and we did enter a position on gold. If you're buying into gold, you want to set your stop loss below 1860, because if we break below that, our next support level is down at 1809. So right now we're looking for gold to break into a bullish trend, and we can see that that 5 EMA has crossed above the 13, and we're getting bullish price action above all of the moving averages. So gold's looking good, and if we can see this bullish trend pick up momentum, we're likely to see gold go back into a bull market. Just a quick check-in on silver. It's doing the exact same thing as gold, bouncing off of support and starting to go into a bullish trend. Next up is Bitcoin, and we see Bitcoin did consolidate right under our price target that we reached at 13,800, and we're starting to break above our resistance level. So the Bitcoin bulls look like they're back, and we're starting to see an increase of volume as we're breaking through resistance. So as you know, with Bitcoin, we can go parabolic at the drop of a hat, and our next price target on Bitcoin is all the way up here at $17,000. So it looks good for the Bitcoin bulls. We're breaking through resistance and holding up above support, and we're in a very strong bullish trend with very strong bullish price action. So next up is the financial sector, and we see the price action closing well above the 20 simple moving average today, and it looks like the trend is starting to snap from a bear trend to a bull trend. The 5 EMA is sloping heavily to the upside, and it looks like it could be crossing the 13 EMA as soon as tomorrow. So bullish price action and bullish trending for the financials. Next up is industrials, and we're also getting very bullish price action on industrials, closing above the 20 simple moving average. The 5 EMA is above the 50, and it looks like it could cross above the 13 soon. Next up is healthcare, and we see healthcare closing above the 13 EMA, and at one point we were trading near the 20 simple moving average, but we did find resistance at that level and closed below the 50 EMA. So overall, the sectors are looking like they're picking up strength, and if we see the sectors grow in strength and start going into bullish trends, that'll be bullish news for the S&P 500, and we're likely to see the S&P 500 continue to head higher. So to summarize this, we see some bullish price action today, but we still have some bearish trends that we need to snap. So we don't want to get impatient, and we don't want to FOMO in just because we had a nice bullish day today. Remember, we're buying the dips and we're selling these bounces, and we're not getting greedy. We're taking our profits and we're getting ready for the next opportunity. Volatility is still 100% in this market, and we don't want to take anything for granted right now. We want to take what the market gives us, we want to lock in those profits, and we want to get ready for the next opportunity. So on the S&P 500, remember, we're looking for a break above the 50 EMA, which is our resistance trend line right around $336. And if we break above that, it's likely that we're going to test $338 yet again. And a close above 338 will be a bullish sign for the S&P 500. So be patient, manage your risk, and remember that volatility is still fully in this market, and we still have some bearish trends that we need to snap. So don't go full bull just yet. Be patient and wait for the technicals to go on the right side of the trend, and then we'll be ready to get bullish and start buying the dips for more of a long-term hold position. So remember, if you're trading this market and you want some additional help, feel free to look in the description and join our Discord. We're making a lot of trades right now while volatility is high, so now's a great time to be a member. And also, please remember to help me out by smashing that like button. And if you're new to the channel, go ahead and smash that subscribe button so you can follow along with all of my daily analysis updates. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.